International Air Transport Association says Nigeria maintains clean slate on blocked airlines funds. India mandates use of locally made solar cells in clean energy projects from June 2026. Plus, oil prices ease, but China policy stance checks losses. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Neka, your guide. A lot is being said about the ongoing tax reform bills. Let's hear from an expert how this will impact on small businesses.
When we are talking about small-scale businesses, we are talking about companies that are incorporated in Nigeria. We're not talking about enterprises. We're not talking about partnership. We're not talking about individuals. But we're talking about limited liability companies that fall in line with the provision of a small-scale business. So the following benefits accrue to small-scale business in Nigeria under the current law. They will enjoy the exemption from filing and payment of value-added tax. That's Section 22, subsection 5 of the Nigerian Tax Administration Bill. Secondly, small-scale businesses will also enjoy exemption from payment of company income tax. That is, and then, according to the law, and then it is no more compulsory that they must need to contact and pay for an auditor to audit their statement of accounts. The directors of the small-scale business can, agreeably with the relevant authorities, sign the relevant statement of account as submitted. So you can now see that small businesses can now thrive well in Nigeria because they will completely and totally exempted from all forms of taxes and levies. Moreover, there are a lot of penalties, so harsh indeed, which the small businesses will have faced. We are in default of filing of returns, payment of taxes on due time. All these have been, removed from the shoulders of the small-scale business. And then for those that the enterprises, so proprietors and individuals, they also enjoy some exemptions. For instance, from 0% income range to 800,000 is zero rated. So that means they're exempted, and aggregatively they will pay lesser tax. So the bill to be welcomed, especially this aspect, tend to favor the small businessmen and then allow it to have its due course.
The tax reform bills have no doubt been generating intense debate, with proponents arguing they will boost economic growth and opponents claiming they will harm certain regions. Taiwo Yedele, chairman of the Presidential Committee on Fiscal Policy and Tax Reforms, recently outlined numerous benefits for households, small businesses, investors, and even state government. But what do these reforms really mean for Nigerians? Joining me today is Keinde Kajesomo, Deputy Director and Head Treaties and International Tax Policy Division, Competent Authority Department, Federal Inland Revenue Service, to break down the implications of these reforms on businesses. You're welcome to Business Express, sir.
Thank you for having me, and it's my pleasure to be here.
Good. Can you walk us through the key objectives of the tax reforms and how they align with Nigeria's economic growth strategy?
Yeah,
Briefly.
thank you. The objectives of the reform bills are captured in the policy direction of the bills, and we have about 11 of them that the issues, we have covered in this bill, and it's from simplification of the tax laws to the fact that we need to consolidate and harmonize our tax laws so that we reduce the number of taxes we have and reduce the number of tax laws we have. We also have the need for us to be globally compliant, to comply with the global rules. We have one of the objectives to ensure modernization, to modernize our tax system, have technology deployed. And also, one of the objectives is because Nigeria has complained recently about the challenges the poor and the vulnerable are facing. So one of the objectives of this reform bill is to take care of the poor and the vulnerable, to ensure that their tax burdens are reduced to the barest minimum, and also to encourage businesses to thrive, businesses to survive. There is need for small businesses to be given ample time for them to grow before they start paying taxes. So, and that explains the policy of exempting small businesses from taxes. So those are the objectives driving the policy. And in all, the expectation is that there will be ease of doing business, to encourage ease of doing business, and to ensure that the poor and the vulnerable are able to survive in the economy we have. Thank you.
Great. So what's the big deal about the increased tax exemption threshold from 25 million naira to 50 million naira for small businesses and startups?
This is a big deal in the sense that presently, if you are a small business, the moment you have turnover above 25 million, you are liable to pay tax in Nigeria. But what we have presently now is that the threshold has been increased. Under this bill, the threshold has been increased to 50 million. That means if a business have a turnover that is lower than 50 million, that business will not pay income tax, that's company income tax, at all. That business will not pay development levy at all. That business will not be subject to value-added tax obligations. That is, it won't have obligation to charge VAT. It doesn't have obligation to file VAT returns or to remit VAT. So that business is free of obligation to carry out VAT, to fulfill VAT obligations. So that is a big deal for them in the sense that it enables them, it gives them time for them to grow and to be able to contribute meaningfully to the economy.
So let's now talk about the reduction in corporate income tax rate from 30% to 25%. What does this mean for businesses in Nigeria?
Yeah, thank you. If we look in the context, where we might say, oh, it's just about removing from 30 to 25. But if you also understand that there are also so many taxes they also pay, apart from the company income tax, there are so many taxes they pay, earmark taxes. They pay Naseni levy, tertiary education trust fund, so many taxes. Some of them are not even captured in the main laws. Some of them are captured in the small laws we have. So what these bills have done is number one, as I said earlier, to harmonize the laws. So in harmonizing the law, we have just two principal income taxes for them to pay, which is now the company income tax and the development levy. And the company income tax is going to come down from 30% to 25% within 2 years. And 5% basis period is a huge difference. I mean, that translates to close to more than 15% reduction. That's more than 15% reduction in the tax they currently pay. And also the development levy will also reduce over the years. By 2020, is reducing to just 2%. So on the whole, by the time you add the two together, they are paying only 27%. And presently, if you add all the taxes they pay, it's actually more than 35%. So we are looking at a drop of close to 10% in the taxes they currently pay.
I'm interested in hearing your thoughts on the provision allowing expense incurred by a startup within 6 years pre-commencement of business to be tax deductible. How do you think this will impact startups in Nigeria?
Yeah, thank you. Prior to now, we know pre-incorporation for we tax men. When you incur expenses before you start your business, those expenses you incur are not deductible because the provision of the law says that the expense under Section 24 of the current company income tax, it said the expense that is deductible is the expense that has been incurred in earning the profit that is taxable. So if I generate profit this year, it is the expense I incur in generating that profit that is deductible. That means if I have incurred an expense about 5 years ago before I start doing this business, that means that expense is not incurred for the purpose of me earning this profit. But what we have now in this bill, because that may seem not equitable, because if I have not incurred that expense 5 years, 4 years, 3 years ago, I might not be able to do the business I'm doing now, and I might not be able to generate the profit I'm generating now. And that explains why now, under this bill, those pre-operational expenses, those expenses you incur before you actually start, you commence the business, those expenses are now liable. Those expenses can be aggregated and deductible from income before you arrive at your taxable profit.
That's great. So what kind of impact can businesses expect to see on their cash flow with the introduction of faster tax refunds?
Thank you. When you are paying tax, you pay tax using your cash. So the moment the tax rate is reduced, that means the taxes you are going to pay is reduced. And when the tax you are going to pay is reduced, it increases the money in your hand as a business. It's also increase your profit that is distributable to your taxpayer. So the implication of this for businesses is that it will increase their cash flow because the money they should have used in paying so and so amount of taxes will now be with the company and it's available for them to reinvest. So what we are going to see is that they have more money to do more business, they have more money to invest, they have more money to make more profit, and at the long run, it's going to even benefit the economy because the tax which we have collected now, it means we are allowing the business to continue to do more businesses with that money to make more income. And in the long run, as they make more income, there's more profit and there's more taxes to be collected in the future. So this is a policy direction that allows the business to grow first. And when the business grows, there's more profit available for the purpose of taxation.
The Office of Tax Ombudsman is a new development. How do you think this will change the game for small businesses dealing with tax disputes?
This is one of the very good policy that is coming out from this reform. Presently, if you are a small business and you have any issue with the tax authority or any of the tax bodies, you either need to go to the tax appeal tribunal or you go to the courts. And you can't go to court without a lawyer, and you can't go to the tax appeal tribunal without a lawyer or a tax expert. So that means you need to incur costs to get those lawyer or tax experts. And that is a huge cost for businesses. And that is why presently most small businesses, when they have such issue, they keep quiet and lick their wounds. But what is applicable now is that there is a body that has been set up where those small businesses or those that are vulnerable can go to lay complaint about what they find unfavorable in the treatment that has been meted to them by revenue authorities. So he has given a voice to the taxpayer. Now it's not just the big taxpayers that have a voice, that have the capacity to go to court to complain. Now even the small businesses, the individuals, the vulnerables, they have a place to vent their frustration, to vent their complaint, and those complaints will be looked into. And the rule says in a very short time, that complaint, the tax ombudsman will take it up with the relevant authority, and within 1 month, that issue will be settled. And for me, that's is a good thing that is coming out of this reform. Thank you.
Great. The tax reforms, no doubt, are excellent reforms, but how will they impact the ease of doing business for small businesses, particularly regarding tax compliance?
A very good question. And as I said earlier, it's one of the objective of this reform is to have ease of doing business for everybody, not just small business, all businesses. And how will this be achieved? Number one is the fact that before, when you are doing the business, you have more than 30 laws to look at. And now you have just 4 laws to look at. Very simple. You can just pick. And in fact, it's not all the 4 laws that apply to you. So in all this, if you are a small business, what you only need to pick is you pick the Nigerian tax bill, which if become an act, it will be Nigerian Tax Act, and there is a chapter that relates specifically to that business. They go to that chapter, and that is all. The next thing is how to comply with the rules. They go to the Nigerian Tax Administration Bill. That is all. So having 30 laws to look at is a thing of the past. Also, having 30 taxes or 50 taxes to pay is a thing of the past. Then, ease of compliance. We are going to have ease of compliance. Now, before, a small business need to look for tax consultants, look for somebody to compute his taxes. But now, because the tax law is so simple, a small business or anyone can carry the tax law now and understand what is in there, and they can fulfill their tax obligation. This will reduce the cost they incur on complying with the tax laws. So that is another way they will have ease of doing their business. This other one is the VAT issue. The fact that under the VAT presently, under the VAT rule, our VAT is not tax neutral in the sense that when you incur input VAT, you cannot deduct for expense on capital assets. You can also deduct in respect of expense on services. But now, all this expense, VAT you pay on these expenses can be deducted from your output VAT. So when you pay VAT, you remove every input VAT you have paid as a business from your output VAT. That means you are able to do your business simply. Businesses are not going to bear any burden of VAT.
I must say a very big thank you to you, Mr. Keinde Kajesomo, for sharing your thoughts with us on the implications of the tax reform bills on businesses. Thank you very much, sir.
Thank you. My pleasure to be here.